So Kamil, can you please talk us through one of your favorite trades you made on Fintokei? Maybe tell us the key support lines, resistances, and what strategy do you use?
In general, my approach to the market is mechanical, I used to trade based on order flow using Sierra chart platform. But when I trading DAX, after some time, I realized that such an approach based on many variables often made me subjective. I often would fall into market traps and hold losing position for too long. And then one of my friends pointed out to me that I performed much better when I traded using simple indicators. And this made me think a lot. I was thinking a lot about what he said to me. So I started to rebuilding my strategy based on simple indicators that would clearly tell me in some kind of binary way in which situation I can enter the trade and what my maximum risk is. An approach that clearly shows what must happen for me to be allowed to open a position. Remember, of course, the market is always right, not you as a trader. And media noise and macroeconomic indicators often create beliefs in us, somewhere in us, and that beliefs are not desirable when we are trading. So my methodology is built in such way that in every situation I can objectively assess what I can and what I can't to do at any given moment. Have you ever wondered why traders like Trader Tom or Pax Trader have significantly simplified their strategies? Why is their approach as simple as possible? And why does success come from discipline in executing their strategies? Do you think they didn't want to dive into order flow? Do you think they were too lazy to learn something advanced? No. Many traders traded in institutions, had access to huge amount of money, and they learned techniques that most of us will never know. So why they trade based on very simple concepts now? Because the simpler the system is, the easier it is to maintain discipline. That's why today I will show you a small part of my strategy. Here you can see some trades. Okay, on the chart you can see now IBW and IBM5. IBW is weekly initial balance. This range is determined based on the first hourly candle of the DAX cash market on Tuesday session. IBM5, it's first 5-minute initial balance. This range is determined based on the first 5-minute candle after the market opens each day. There are, of course, other variations such as IBT, it's fourth 5-minute candle after the cash open, first 5-minute candle of the US session, first hour candle of the European and US session. But as I mentioned before, we don't have enough time to go into all of this. So how I use initial balance, these two initial balances in my trading. The weekly initial balance provide a broader picture. It acts as a directional filter that favors one side for several days until the new weekly initial balance is formed. The 5 minutes initial balance show us intraday structure, So just like if the market is trading above the weekly initial balance, I don't take short positions. If the market is trading below the weekly initial balance, I don't take long positions. And the same thing with 5-minute initial balance. If the market is trading above the 5-minute initial balance, I do not take short position. If the market is trading below the 5-minute initial balance, I don't take long positions. It's simple, right? Especially with the 5-minute range, we experience many false signals and a lot of noise, especially when volatility is low and price consolidating around this range. But the biggest losers do not come from consolidations. They happen when a large directional move begins. And this approach protects us from staying on the wrong side of the market and developing a strong bias against the trend. To be clear, my decision-making process is not based solely on IB. The entire process is based on moving averages, volume analysis, market structure, biases, even intuition. Before each session, we try to prepare a primary scenario and a secondary alternative scenario. Sometimes, of course, there is only one scenario for us. So maybe let's take some example from the chart. Let's take an example from this chart, and let's say this session. It's first 5 minutes of the session, and let's say in today's session our scenario expected and some upward move, and in this case we can buy. Under 5-minute initial balance we could not buy, but from this point we can buy again. What is the case here? Another session. From this moment, we can't buy. If our scenario was going for new high, for example, from this moment, we can't buy. If price go above this range, we can buy. So it's not like price breaking above the initial balance creates some buy signal, so we automatically enter a long position. But breaking above the initial balance is just some kind of trigger that gives me the green light to buy, but only if my scenario already expected an upward move. In this example, there was no trigger which led me to buy. Okay, maybe some fresh example from yesterday and today's sessions. Let's assume yesterday's scenario was bearish, okay? And what we know, we are trading in weekly initial balance, okay, so it's a kind of neutral, but previously we have short signal, so it's mixed. But let's focus on 5-minute initial balance. From this moment, we can sell, even if our scenario was based on a lot of very strong factors. This candle tell me I can sell. So my scenario is useless until the price go under these levels. And we see price move up to the end of the session. And what did weekly initial balance tell us today morning? That we are in bullish structure. And look, this is the first 5-minute initial balance. And we had some kind of opportunity to buy inside the 5-minute IB zone. It was for a moment profitable. Let's count it. No, it was 100 points move. But from this moment, we can't buy. We can, from only basing on this part of strategy, we can say that we are trading under the initial balance, price retested it, and this is the place when from this part of strategy, we can say we can take short position. If the price moves back above this range and close at least a 5-minute candle above that, we return to an uptrend and will no longer consider short trades. Maybe another example for Nasdaq. At Nasdaq, we use the first 1-minute candle as an execution tool. Now, it's not about price bouncing around this range. It's about not getting trapped. If you want to take a short trade, the 1-minute initial balance must give me the green light. If the price breaks above this initial balance, I immediately cut my loss. The same logic applies to Nasdaq. 1-minute initial balance is not a trade signal. It's a trigger that allows me to take a trade if my scenario aligns with it. It helps me manage risk and avoid unnecessary losses. We can look for some if I have, this is a great example. 1-minute initial balance, we have green light. From this moment, we can buy in this area, stop loss under this area. It's offered. From this moment, we can't buy. Shorts only allowed. Also nice move. Okay, it's a very interesting example. Also, 1 minute initial balance from the first minute of the US session. Price move above, it's red light. For long position, price moves under. It's green light for short position from this moment. Okay, and some final thoughts. This is the most simplified explanation that may inspire some of you. You know, my strategy is more complex, but it is built entirely on binary 0-1 yes-no elements. I hope this breakdown can help you to understand how I filter trades and maintain discipline in my trading approach.